Hi everyone, this is Burak from Trading Channels. As usual, let's show the disclaimer first and then quickly begin our weekly analysis. I'm going to start with E-mini S&P 500 futures continuous charts. This is a linear scale chart which I showed in the previous video. S&P is still there, basically touching the top band of the red channel, and this channel is basically going all the way to the 2009 bottom. So if you look at the top band and the bottom band, it's a perfect channel. 3 hits on the bottom band and 3, 4, 5, probably 6 hits on the top band. So it's gonna either break this channel to the upside and enter a new phase of the bull market. There may be still something there on the blue resistance, but for now I think what we should concentrate is the red top band, as if you can see closer here. So we had 3 hits, almost 3 hits on 4 hits actually, back in 2014, end of 2014 and 15, and then it came all the way to the top band again just recently with 4 hits, 1, 2, 3, and the 4th hit happened on Friday. In the meantime, if I look at the orange channel, which is also quite a nice continuation channel, and that's the top band is basically coinciding with the top band of the red channel. So 1, 2, 3, 4 hits. It's really bashing on that resistance, and it's trying to break up, similar to Nasdaq, and that's what happened on Nasdaq just recently. This red resistance, 1, 2, 3, 4 hits in 2014-15, and then we had in 2017 here another hit. So that's the 4th, the 5th, and just recently the 6th hit broke it up, and the back test was a perfect test of that broken resistance, and that's why Nasdaq is still bouncing, and it's still bouncing, and it's still rallying quite strongly. It's not necessary to look at the shorter term time frames generally when it is such a massive breakout to the upside. I mean, it only shows the significant strength of a market when a rising resistance, just like the red one, a long-term rising resistance breaks to the upside, which means this market doesn't want to sell off. And let's have a look at the Dow Jones. We are in the same position just like on the S&P 500, the same channel. This is a log scale, by the way, not the linear scale like the S&P, but that's why I tend to check basically both log scale and the linear scale for indices on the long-term charts, and I find merit using both types, both time scales. So sorry, price scales. Let's see this one. The blue bottom band has 3 hits, and this is not a channel which you know starts from the 2009 lows, but it's still like a continuation. I mean, if we, let's say, usually this is what happens with these sorts of channels. If the market reverses on the blue top band, something like this, let's go there, yeah. So let's have a look at the entire action. I would expect, so this is more like a double-decker channel. So the top side, or the top half of it, has been filled completely, and it's basically testing it's going to test the top band probably around 23,640. That's what I see on my chart, on my broker's data. It can be different from broker to broker. However you plot it, it's very hard, of course, to pinpoint the exact point where it's going to test it, but it's not an exact test yet, so it may still do that. So let's assume it reversed there. It comes down all the way down here on the mid channel support, and it will probably bounce once more. And if it breaks down all the way down here, then I would expect a big bounce at the very blue bottom band. And that's how these things happen most of the time. This is FTSE. So this is from 2016 lows, and you can see the blue channel pretty accurate on the top band, and the bottom band is holding still. The recent, so I plot these lines, internal supports and resistance lines, just to pinpoint where within the channel where we have internal dynamics of the channel, to see where it can still reverse or find supports. The recent bull flag, the green bull flag, was broken. The back test was a fantastic support, and now I reckon we are within the orange channel. The top band has 3 and the bottom band has 1, 2, 3, 4 tests. The fourth one was the Bank of England's rate decision, so it was quite volatile, but still couldn't break it. And now we're heading, I think, to the red top resistance. It's not a channel, but I can see there is some merit to it, and this internal resistance which is holding, and the top, the all-time previous top, may reflect into the future within this red structure here, and that's where I'm thinking FTSE is going. So let's go into the Forex world. This is Euro US dollar. We basically, if I look at it this way, this is a long-term weekly chart, by the way. Sorry, the blue ones, let's delete the blue ones. So the green channel is to me looking like a bull flag off, and the post of the bull flag is basically the rally from 2000 to 2008. So yes, back in only a year ago, euro, everybody was super duper bearish on euro, and everybody was calling for parity with the US dollar, but it bounced, and it bounced quite strongly. That was more than 1500. Actually, it was 1600 pips all the way to 118. It came, actually, was it 120 even? 120, 121. It was very close to it. But this horizontal resistance held at 120.90. Actually, you can see that back into June 2010 and in 2012, and here a bit more, not so accurate, but there was some resistances over there, and euro reversed right there, and now it broke down the perfect red channel with the push of Draghi. I was thinking perhaps it has one more bounce to go from the red bottom band, and it's gonna bounce and it's gonna break the perfect bull flag, the orange bull flag, and it's gonna reach maybe to reach at 121 again, and then break the red channel. That's not what it did, and Draghi pushed it over the cliff, talked euro down, and now euro is still quite bearish, looking in at this bear flag. Just Friday, this green bear flag broke down, green bear flag was textbook, and you can see it looks now negative again. On the pound, this is a weekly chart all the way from 1981, I think. This green channel is a textbook. Perfect sideways action. What is it? This is a 30-year. Is it 30 years? Yeah, I think more than 30 years. And it found the very low at the Brexit panic, and you can see there is substantial internal resistance here on at 140, 150 levels. It's not there yet anyway, but just when did it happen? So the red one, the red perfect channel, which was the downwards channel from 2014 high, it broke up back in 2000, yeah, this year in June. It tried to backtest it. It wasn't exactly a backtest, and it kept on bouncing. And there has been some other resistances such as these, which played an effect during that backtest. You can see this diagonal resistance was broken. The backtest, actually two backtests, if I put it in orange we can see it clearly. So this diagonal resistance was tested as resistance. A few choppy moves here, came down, and it broke up the orange and the red one, and then the backtest held, as you can see quite clearly here and there. And then cable has been quite strong since then, although the recent action is becoming a bit more weaker. So I'm gonna put this in blue, and this blue channel, its two top band hits has happened quite early, but the bottom band has 1, 2, 3, in fact, yeah, 3, and now the fourth one with the Bank of America's rate decision is breaking down. I'm not sure if it's gonna reclaim this channel. It's certainly trying to get back into the channel, and if it can't, then we may be looking at 125 again. And if it really wants to backtest the red channel, the red broken channel, then we are looking into 120 again. So that's how I see it. On the Japanese yen, this is a daily chart, but from 2011 lows. The red channel is a perfect rising channel with perfect internal support and resistance line. So two hits on the top and many hits on the bottom. So 1, 2, 3, 4, and currently it's holding. So it's still looking bullish, and this is very critical. The blue top band, the blue one is not a channel yet, but the blue top band has 1, 2, 3, maybe 4, 5 tests, and it's going to be tested again at 114.70. I think if I come closer, it's going to be tested right here at 114.70 area, and if that one breaks up, then it's going to be horrible for the precious metals, I think, because they are moving in tandem most of the time. And if Japanese yen gets stronger, then it should break down the red channel and then come down all the way to the blue bottom band, which is around 90. So this area, probably this next week, we'll see what's going to happen with Japanese yen. And this is oil, and this is my last analysis for this weekend. The blue resistance breakout was fantastic, bullish, and I think oil is now making its way to, let's put it this way, let's make it a better one. Probably going to check out the, if I put this in black, yeah, the black top band may be next, which is above 60. Let's get closer and see how the short term looks like. And here it is. The red channel is very nice with internals, quite accurate. Actually, the recent low on Friday held right at the red internal support, which was also reinforced with the green channel. You can see the green channel is still holding, and last but not least is the orange broken resistance. This is a diagonal resistance, broke up here and it came down for a back test. So this level was being held by 3 supports: the red, the orange and the green. So it was quite bullish still to me, and that's why it's heading probably, I mean, I don't think it's gonna stop before 56, 57 before a pullback. Well, who knows? Of course, I always say who knows, because I don't know, and I don't think anyone can know what a certain market will do at any given time, or what it's going to do in 3 months, 6 months. Some people claim that they know what it's going to do 3 months time, what gold is going to do or what oil is going to do. That's complete rubbish. No one knows what a market will do. My main principle is, if I can buy the supports and sell the resistances, I can make gains, and I need visual confirmation of these things. That's why I don't count waves. I don't do Elite Wave, because Elite Wave thinks that, yeah, they figured out the whole market. Well, it's good for them if they can, but I can't. I need visual confirmation of my analysis, and lines and channels. Give that to me, and I can keep it simple. I can keep the stop losses quite tight with this method, and yeah, I think the subscribers are enjoying this sort of analysis, and yeah, I hope you join me. Have a good weekend, have a good rest of the weekend. Take care. See you next time. Bye.